So the rumor mill is buzzing, and it's a big one. Amazon is reportedly looking at a massive $9 billion deal to buy satellite operator Globalstar. Now, this isn't your average tech buyout. Oh no. This is a high-stakes gamble and the huge battle to control internet from space. Let's dig in and figure out what this is really all about. And believe me, this isn't just about Amazon. What we're seeing is basically a brand new space race. You've got giants like SpaceX and, of course, Amazon all duking it out to blanket the entire globe with high-speed internet from satellites. The stakes, they couldn't be higher. All right, so that brings us to the $9 billion question, literally. Why Globalstar? I mean, they're not the biggest name in the game, not by a long shot. So why would Amazon be willing to shell out that kind of cash? Well, to get to the bottom of it, we really need to understand where Amazon is in this race to begin with. And here's the honest truth. For Amazon, this is all about playing catch-up. Their own big satellite internet plan, Project Cooper, well, it's lagging. And not just by a little. It's way behind the competition, and that window of opportunity to jump in, it's closing. And it's closing fast. Okay, just to put the sheer scale of this into perspective, Amazon's goal is to have 1,600 satellites up there by mid-2026. But right now, they've only got about 200. Now compare that to SpaceX's Starlink, which already has over 10,000 satellites in orbit. That's not a gap, that's a chasm. At this point, trying to build everything from scratch isn't really a viable strategy anymore. They desperately need a shortcut. So Amazon needs that shortcut, and it looks like Globalstar could be exactly what they're looking for. But here's the thing. It's not just about the number of satellites. Globalstar has something really unique, an ace up its sleeve. Investors like to call it a competitive moat, something special that keeps the competition at bay. Let's take a look at what that is. All right, here it is. The crown jewel for Globalstar is its licensed spectrum. The best way to think about it is like having your own private, multi-lane superhighway in the sky. It's exclusive, only Globalstar can use it. Meanwhile, everyone else, they're all stuck on the public roads, dealing with traffic jams, congestion, and all sorts of interference. And this comparison really spells it out, doesn't it? On one side, with that private highway, you get total control, incredible reliability, and tight security. And that is absolutely essential for certain customers. Think defense, remote mining operations, disaster relief, you get the picture. The shared networks, well, they're a gamble. They can get congested, they're susceptible to interference, and honestly, they can just be plain unpredictable. But you know, even the strongest moat has its vulnerabilities. It's not totally impenetrable. Globalstar is staring down some really fierce competition. You've got established players like Iridium, and then you have the 800-pound gorilla, SpaceX. And on top of that, let's be real, the satellite business is brutally expensive. You have to keep pouring money into constant, costly upgrades, and you're always living with the fear that some new technology could come along and make yours obsolete overnight. Okay, now we need to talk about another huge piece of the Globalstar story, because you really can't understand the company without talking about its most important partner. And this partner is both a lifeline and a leash. I'm talking, of course, about Apple. Wow, yeah, this chart pretty much says it all, doesn't it? A staggering 63%, almost 2/3 of Globalstar's revenue comes from just one customer, Apple. They're the ones using Globalstar's network for that emergency SOS feature on the iPhone. Now, on the one hand, that's great. It's steady income. But on the other, that is a massive risk. That's the definition of putting all your eggs in one basket. But here is where you have to give Globalstar's management a lot of credit. They've been incredibly shrewd. See, they've used prepayments from Apple to cover almost all of their major capital expenses. What does that mean? It means they can upgrade their entire satellite network without having to take on a mountain of debt or issue more stock, which would water down the value for existing shareholders. It's a really, really savvy financial play. Okay, so all of this brings us to the central conflict, the big question that every investor has to ask. You've got all this market buzz, all these acquisition rumors swirling around. But what happens when you strip all that away and just look at the fundamentals? What is this company actually worth? The answer? Well, it might just surprise you. All right, let's start with what the market is saying. Right now, with all the speculation about the Amazon deal, the stock price is sitting at around $67 a share. That's the price on the tag today, and it's full of all the hype and hope for what the future might bring. But what happens when you shut out all that noise and just run the numbers? You get a very different picture. There's a method called a discounted cash flow analysis. It's a fancy way of figuring out what a company is worth based on all the cash it's expected to make in the future. And that analysis, It puts Globalstar's real, intrinsic value at only around $29 a share. That is a huge, huge disconnect between the hype price and what the underlying business seems to be worth. So if you're just looking at the fundamental numbers, you think this stock is way, way overvalued. But there's a whole other way to look at the market. It's called technical analysis. These folks, they basically ignore the company's financials and instead look for patterns in the stock chart itself, trying to read the psychology of the market. And right now, their charts are telling a totally different story. What you're looking at here is a pattern based on something called Elliott wave theory. Now, the core idea is pretty simple. It suggests that the market doesn't move randomly. Instead, it follows a predictable pattern driven by human psychology, 5 ways up and then 3 ways down. And according to this analysis, Globalstar has already gone through 4 of those upward waves and might just be starting the 5th and final big push higher. So this theory, it maps out a kind of psychological journey for a stock. You see, wave 1 is the initial climb, then you get a little pullback. Wave 3 is usually the biggest and strongest surge. And now, after one more dip, the theory suggests we're in wave 5, that last big euphoric push. And get this, the price targets for this final wave are projecting a potential value way, way above today's price, maybe even somewhere between $100 and $120. But, and this is absolutely crucial, the theory doesn't just predict the party, it also predicts the hangover. Once that big wave 5 is finished, it says a major 3-wave correction is coming, and that correction could wipe out a huge chunk of all the gains made on the way up. It's the classic boom and bust cycle, right there in the chart. Okay, so let's just recap. We have 2 stories that could not be more different. On one side, you have the fundamental business value, which says the stock is worth maybe half of its current price. And on the other side, you have the charts, which are hinting at one last big rally before a major drop. So what on earth are an investor supposed to do with that? When you really boil it all down, it comes down to this. The future of Globalstar's stock price seems to depend almost entirely on that one potential deal with Amazon. It's a binary outcome. If Amazon actually buys the company, shareholders will probably see a nice premium. But if that deal falls apart, the stock price has a very, very long way to fall before it hits that fundamental value of around $29. And that leaves us with the one critical question you have to ask yourself if you're looking at this company. Is an investment in Globalstar a bet on its unique technology and its long-term future, or is it just a high-stakes bet on a single corporate deal going through? How you answer that question, well, that changes everything.